Tax ruling update. Alert. Okay. Just before Christmas, the ATO released a new draft tax ruling called TD, so Tax Ruling 2025/D1, dealing with holiday homes and holiday rentals and the ATO's view on what is and what is not deductible. Okay. Now, a few things first. If you've got a holiday home, a beach house, and you rent it out, broadly speaking, up until these rules, you could claim a deduction for the expenses incurred, as long as you produce assessable income. If you use it for personal use as well, the general view has often been over the last 10, 20, 30, 40 years that you'd apportion the personal use component and the non-personal use component, as long as the premise was available for use, as they term it. That's been fine. However, the ATO is now taking a slightly harder, or maybe even more slightly harder view on what this means. And this ties in with the section of the Tax Act that deals with leisure facilities. Okay, so a leisure facility is land and buildings that can be used for recreational purposes. And Section 2650 of the Income Tax Assessment Act, can excuse the tax language, this stuff's important, it denies a deduction for expenses incurred in a leisure facility. So if you own a boat and you drive it around Sydney Harbour, for example, and park it outside and take it out of the water and use it as a private boat, that's a leisure facility of sorts. Same with a holiday home. If you had a holiday home, don't produce any assessable income, then that's a leisure facility. Deduction is denied. That makes sense. Okay, I don't think anyone would necessarily disagree with that. However, this apportionment question is a good question, because I said what the ATO have decided or looked at is they're producing, the tax ruling is looking at how much and how often and when the property is used for producing assessable income. So is this primary purpose producing assessable income, or is the primary purpose for you to use it as a holiday home and every now and then rent it out to get a tax deduction to help pay for the cost of the place? So some of the things the ATO will look at in determining whether the premises is a leisure facility and hence your deductions are denied are things like, is it available for rent during peak times? So during like a beach house, for example, is it available for school holidays for rental to the common market, to everybody out there? Or is it you book it out for 2 weeks between Christmas and New Year's and then have it available for the rest of the time? Is there a genuine intention to rent, i.e. is the market rent you're charged or the rent you're charging the market rate, or is it astronomically high compared to the rest of the market? Or do you reject bookings out of hand for no particularly good reason? Obviously, you've got to keep records and detailed records about this sort of thing as well. The other part too is, are the facilities within your holiday home, for example, are blocked off? So let's say you have a holiday home with a pool down near the beach somewhere, and you don't let the tenants, don't let the people rent it use the pool, you don't let them use most of the premises. They can use two front rooms and a bedroom, but the rest is locked off to them. The substantial part of the premise is not available for their use. That would indicate to the ATO that you're not genuine in your desire to rent this thing for assessable income. It's more, a side business, if you will. So what this means is if the home is not considered genuinely available for rent, then your deductions will be denied in total. Okay, so what that means is no longer an apportionment will be denied in total. And the ATO does give a few examples through their tax ruling, which is still draft and will be finalised with effect from 1 July 2026, probably. But like I said, it's really tightening up the rules. They also provide, as they do these days, a green, amber, red zone with various examples about what will be considered green, what will be considered amber, and what will be considered red. And so if you end up in the red zone, that's the area they're going to target for compliance. Okay, TR 2025/D1, draft 1 to be released in 2026, probably going to be drafted as tax ruling 2026-1. Look out for it. If you've got a holiday home which you rent out and also use for your own private purposes, have a read of it or contact your accountant for further details. Thanks.